Hello and welcome to Dialogue. China's manufacturing activity has returned to growth, ending a 5-month run in contractionary territory. The latest data shows that the efforts over the past month to boost growth have produced an impact. At the same time, further fiscal stimulus is expected to be approved next week at a meeting of China's top legislative body. So what's the actual effect of China's stimulus so far? And what more needs to be done to strengthen confidence of foreign investors as well as Chinese consumers? How does the long-term trend of Chinese economy look like? Join me for our discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Adam Dunnett, General Secretary of the European Union Chamber of Commerce in China, Clare Pearson, International Development Director, Asia of DLA Piper, and Professor Gong of University of International Business and Economics. Welcome to Dialogue. So, John, I will start with you. We have the latest figure of the PMI, Purchasing Management, the number here, Caixin number for the private sector of the manufacturing in China. Right. So it's 50.3, higher than September 49.3. As we know, as long as the figure is above 50, that means the activity is expanding. Right. Otherwise, it's shrinking. Right. And also, this reading is in line with the figure released on Thursday. Right. People say that's an official figure, mostly referring to the state-owned big companies. What do you make of that?
Well, I think this is the first time that this number is PMI number, Purchasing Managers Index number, is turning above 50, which means, as you said, expansion. And I think finally it's starting to happen. I think this thing got to happen in the wake of the massive stimulus package that has been announced by the central government a few weeks ago. If it didn't happen, we're in big trouble, I guess. So I think, moving forward, probably we are indeed past the bottom, I think. We're starting to see recovery activities, especially, I think, as we just discussed, the economy so far has been pretty much dragged by the ramifications of the real estate slowing down, which manifests in the local government debt, right? And finally, the central government is addressing that. So I think, with this issue being gradually addressed, we probably are getting back to normal. I think especially the investor confidence from the private sector should be restored to some extent. So I would expect that, for the rest of the year, I think we're only going to go north. I think the economy is going to get a little bit better, I think, mm-hmm. and hopefully we should be able to achieve an overall GDP growth target for this whole year, maybe a little bit less than 5%.
Around 5%.
Which is in line with the government's objective of around 5%.
Yeah. Well, Claire, so can we draw the conclusion now, over the past month, we do see intensifying efforts, by the central bank, by the financial ministry, by different, of course, NDRC, for example, press briefings one after the other, policies one after the other. So they are having, let's say, the effects, positive effects on the economy.
Yeah, Shinto, very good to see you. Definitely the policy shift, the changing gear is beginning to feed through. We're seeing increasing client confidence. For example, we have 3 new large projects in China, all with foreign joint venture partners. And that's really come about, or at least it's gained momentum since the policy change. And of course, China Inbound Investment Expo is on in Shanghai. And people are flying in. I've seen there's 1,000 exhibitors. There's over 260 Fortune 500 companies coming to Shanghai between the 5th and 10th of November. And that's China International Import Expo. So this is foreign companies coming to China to sell their goods to Chinese buyers. I feel the economy's really back. I'm not saying it's not been a tough 5 years. The last 5 years have been tough. It's like when you're climbing a hill on your bicycle and you can just see the top of the hill in sight. You're shifting gears. It's a little bit clunky, but you're getting breath. The money's coming through and you can see the downhill in sight. So I'm looking forward to the next 5 years. The last 20 years have been phenomenal. The last 5 years have been phenomenally tough. But I see the next 5 years as China getting back in gear.
So Adam, what do you make of this, these efforts? Are we seeing, the goal is being, let's say, this is maybe the initial step being achieved, to restore growth, to restore confidence?
Yeah, well, I think the government has definitely bought itself some time, and the recently announced policies is welcome news for a lot of companies. I've seen the new old equipment trade-in scheme already having a positive effect on a number of our members, those in the boiler heating industry. The auto industry has actually had a bit of a pickup after a rough start to earlier this year. And in furniture companies as well, they've seen a clear pickup. So I think from a consumer perspective, they've also have lower interest rates on housing repayments. So it's put a little bit more money in the pocket of consumers, and so they're out there, and I think they're enjoying this period. But it's really what the government's done is it's bought itself some time, created a little bit of positive momentum, but now is really the time to implement some of the harder structural reforms that it needs to make. Use this opportunity, use this time now to make the tough changes that it needs to make, and make some bold and courageous decisions as well. Particularly, I'd like to see in the financial sector some increased opening for financial services, where we could have more variety of products available to individuals, such as fixed structured incomes that can give base guarantees to the principal amount, structured in a way with a little bit of insurance and a little bit of other options, so that people can have protection for their future income, but a little bit more diversification and some of the safety net features that older families and couples are looking for in their retirement period.
So Adam, you are talking about restoring people's confidence of spending long term, right? I mean, if you feel you are safe, the understanding is like you tend to spend more, right?
Yeah, I mean, again, people will spend if they've got confidence. So those that, there's a concept of marginal propensity to consume. So you put an extra dollar in somebody's hand, how likely are they to spend it? If people don't need to spend, they won't spend it. If they're concerned about their future and their future income stream, then they're also likely to save it as well. So that's the balancing act that the government needs to consider, and that is you've put in a little bit of extra liquidity into the market. You've given people the money to spend. Will they spend it? And so part of it is happening, but part of it could happen more if we can build in that extra level of confidence and security that I think both consumers and businesses are looking for.
Well, related to that, John, of course, we have these 6 large state-owned banks, commercial banks, said this week that they will gradually implement the new pricing mechanism for personal housing loan interest rates. So the purpose seems to be multiple. They want to deepen interest rate marketization reform, promote the development of a real estate market, and also boost consumption. Basically, more money in the hands of the consumers. So.
Well, I think the government has finally made up its mind that it won't just stand by watching the real estate market go down the drain. They're going to turn it around, I think. And I think the policies you're just talking about, introduced by the banks, basically designed to encourage more borrowing from potential buyers of real estate. And I think we need that, actually. I think ultimately, these developments needs to be bought by somebody, right? Can't just sit in inventory forever. I think these restrictive policies in the real estate market was designed at the time when there was rampant speculation in the real estate market. But today, in today's environment, I just don't see any prospect of speculative activities. People are not just buying real estate properties for the hope of this is going to appreciate rapidly into the future, right? Nobody's doing that anymore. I think we have to. There's still some hard demand there. Young couples getting married. I mean, they want to settle down in the cities. They need to have a new place. I think this kind of a demand is still there. And they shouldn't be held hostage by the restrictive policies introduced at a time when the market was full of these speculative activities. So I think the bank is doing the right thing to make sure that these kind of a legitimate demand can be met with the help of these mortgages from the these leading state-owned banks. I think they actually set an example, and I'm pretty sure that other banks will follow. Private banks, other types of banks will follow, just to make lending a little bit more accommodating to the borrowers. And we definitely need that. I mean, after all, real estate is still, by and large, the largest sector in China's GDP.
Yeah.
It's sort of comparable with the auto industry, about 13% of GDP. It's a very sizable amount, actually.
That's true. And also, the Vice Minister of Commerce said new policies in the field of consumption will be introduced. And as we mentioned about, this more stimulus package is being expected for next week's meeting. People are talking about trillions of dollars.
Yeah, I think when we say the government is giving these kind of incentives or checks back to the consumers, we're really talking about the taxes being rebated to the consumers. I mean, these taxes are priced into the price, right? As part of the price, these are the government collected fees and taxes out of every, say, 100 yuan of purchase. What we are talking about is the government taking some of these taxes, giving back to the consumers, sort of as an incentive to encourage consumers to spend more. I think at this point it probably makes a lot of sense. But I'm a little bit skeptical, to be honest with you, that this kind of a policy would have a long-term sustainable effect. I mean, I think the short run, it definitely stimulates the economy. The hope is that it will jumpstart the economy, make things a lot better, so that we don't have to rely on these policies to make sure that consumption will continue to grow. So I think in the short run, we're probably going to try this. It's actually been tried before. I think right after the COVID time, when the local governments start to give out these kind of free checks to jumpstart consumption, it was actually quite successful. My understanding is so now we'll try this again, and hopefully it will jumpstart the economy, jumpstart consumption again. Yeah.
Right. Claire, of course, at the same time, you also have the news of they announcing this new edition of national negative list, basically, what's on the list that will be off limit for investment. And then, it's shorter and shorter. So they are removing the last two items on the list, with restrictions in the manufacturing sector. So basically, it's open for all for foreign investment from any place of the world. And also they are talking about probably a shorter negative list in the financial, in the service industry. So what's the outlook?
I think it's absolutely to be welcomed. We need a shorter negative list. We want a more level playing. But I can see that clients are really looking differently at China at the moment. So foreign clients are increasingly coming to China. Ones who haven't been here before are signing up to come and visit. And the things they're interested in are really policy, pattern, potential. Policy, the new economic stimulus really does matter. But what we're finding is you talk about the negative list. I mean, it's really access all areas now in China. So, for example, we're building our first football school. So I'm very happy about that. We're building a huge joint venture shopping centre, which is focused on people from diverse backgrounds in northwest China. Very interesting project with a foreign partner. And another project that we're involved in is a theme park, so foreign theme parks. Also recently, I know you saw Kanye West popping into Haikou. There's been a big stimulus to the music industry. So we're really looking forward to some creative collaborations there. So the policy piece, the short negative list is important, but we're seeing a new pattern of consumption. People, they're a lot more confident these days, and people are spending on luxuries again. I really feel that, and I just see what's going on in Shanghai, but also I went to Sanya to a real estate sale last week, and they were selling like hotcakes. I was very circumspect about whether those properties would be selling, those high-end, but they were all selling because, the people in Beijing in the winter, they go down to Sanya, they buy a property, that market's booming. And also foreigners are now interested in investing in Hainan because of its 59 visa policy. So the policy change does make a difference. The other thing is the potential. I live 5 kilometers outside Pudong, and there's a lot of new people living in my area. When I moved there, it's a very quiet area, and I was probably the only foreigner. Now there's people from South Africa, Sao Paulo, from Argentina, Buenos Aires. There's people coming in because there's a new bank in town, there's a new development bank there. So I feel like there's 2 CBDs in Shanghai now. There's one I'm sitting in now, right in the middle. But there's also the new development bank CBD at the old Expo Park. So the policy, the short and negative list, means that we've got people looking at China who hadn't looked at it previously. The patterns, people are shifting up at the economic chain. 100 million people moved from rural China to urban China in the last decade. 300 million are said to be moving from rural China to urban China in the next decade. They're all going to need to buy white goods. They're all going to need to buy luxury goods in the city. So I'm very confident about the economy. And the new development bank, that whole development area around about where I live, there's flats going up, they're selling. And I suddenly realized, wow, BRICS is a massive addition to the Chinese economy. So it's kind of exciting. It's not just the old traditional clients that we're getting. It's a new stimulus from BRICS Plus, and so I'm enjoying watching that. So I'm very confident about China. You can't change the fundamentals of 1.4 billion people.
Yeah.
It's just not a bad option.